All right, let's dive right in. We're going to be talking about the Russian economy. And let me tell you, it is a fascinating, complex, and often really contradictory picture. On the surface, you might see some numbers that look stable, but underneath it all, there's this incredible high-stakes balancing act going on.
And right off the bat, I think this quote really sets the stage perfectly. This is not some simple story about a country on the brink of total failure. While things are definitely getting worse year by year, that doesn't just automatically mean the state is going to collapse tomorrow. The reality, as we're about to see, is way more complicated than that.
So, here's our game plan. First, we're going to look at the currency, the ruble, and what its value really tells us. Then, we'll get into the hidden story behind their inflation numbers. After that, we'll dig into the massive pressure on Russia's main cash cow, oil. We'll see how they're scrambling to plug the holes in their budget, and then we'll wrap it all up by asking the big question. Is any of this actually sustainable in the long run?
Okay, first up, the Russian ruble. Now, if you just look at its performance against the US dollar, you might think it's a sign of strength. But once you start digging just a little bit deeper, well, the signals get very, very confusing.
So if you just glance at a chart like this one, it honestly looks like pretty good news for Moscow, right? The ruble, which absolutely tanked at one point, seems to have clawed back some serious ground against the US dollar. On paper, you'd look at this and think, hey, they're bouncing back.
But here's the thing. We have to ask the right question to get the real picture. Is this all about the ruble's own inherent strength? Or is something else entirely going on with the dollar itself?
And, well, here's your answer. This slide really gives us the context we were missing. See, the US dollar has actually been getting weaker against a whole bunch of other currencies lately. The euro? It's up about 15%. The Czech koruna is up around 20%. So the ruble's so-called strength isn't unique at all. It's pretty much just riding the wave of a weaker dollar.
And this is where it gets really ironic economically speaking. Russia's entire economy is built on selling stuff to other countries. Think oil, gas, you name it. But when your own currency gets stronger, it actually makes all your stuff more expensive for the rest of the world to buy. So what looks like a win for the currency is actually a huge headache for the country's main economic engine.
All right, let's switch gears and talk about inflation, because a really similar good news, bad news story is playing out there. It's this fascinating and pretty dangerous chain reaction.
So again, at first glance, the data looks pretty solid. After peaking earlier in the year, Russia's official inflation rate has come down a lot. And for any government, getting inflation under control is, a huge priority.
But why? Why did inflation fall so much? Well, it wasn't because of some brilliant economic policy. It was mostly because economic activity itself has slowed way, way down. People and companies are just spending less money. Maybe because they're scared and saving, or maybe they just don't have as much to spend. It's a cooling economy that brought down prices.
And this is the trap they've basically set for themselves. The economic slowdown and the drop in inflation gave the government just enough breathing room to do something they desperately needed to do: raise taxes. They're hiking the value-added tax to pull in more money. But what happens when you raise taxes on goods and services? Yep, prices go up. So the very thing they did to take advantage of low inflation is now pretty much guaranteed to make inflation shoot right back up again.
Okay, now for the big one. The biggest piece of this entire puzzle: Russia's income from oil and gas. I mean, this is the financial bedrock of the whole state. And let me tell you, it is under some serious pressure.
To really get what's going on, you have to know this number: $70. $70 a barrel. Russia's entire national budget is basically designed around the idea that they can sell their oil for about that much. That's their break-even point.
But here's the problem. The price cap that was imposed by Western nations is set at $60 a barrel. So right away you can see the issue. There's a deficit built right in. They need 70, but a lot of the world is trying to force them to sell for 60, or even less. And believe it or not, it actually gets worse. Russia's main type of oil, it's called Urals crude, often sells for even less than that $60 cap. On top of that, you have India, who is a massive customer, buying 1.5 million barrels a day, and they're reportedly stopping those imports. Then you add in the successful Ukrainian drone attacks that are damaging refineries. You can just see how their main source of cash is getting squeezed from every possible direction.
So the logical question is pretty obvious, right? If the oil money is drying up, how in the world is the state paying for this incredibly expensive war and just keeping the country running? I mean, where's the money coming from?
This chart right here, It tells the whole story so clearly. What you're seeing is a dramatic shift. Back in 2020, Russia was mostly paying its bills by dipping into its massive rainy day fund, basically its national savings account. But look at the projection for 2025. That savings fund is getting smaller and smaller, and they're relying more and more on issuing bonds, which is just a fancy way of saying they're going into debt.
And this borrowing strategy, it's a risky one. They're basically forcing their own billionaires to buy up government bonds. They're also issuing debt in Chinese yuan to try and get foreign money, but that creates a really dangerous dependence on Beijing. And all of this is happening after they've already sold off a bunch of their gold and silver reserves to plug holes in the past. And that's another well you can't just keep going back to forever.
Okay, so let's step back for a second and pull all of these different threads together. When you look at the ruble and inflation and the oil revenue and the budget all at once, a pretty clear picture of the Russian economy starts to emerge. So here it is, the summary of all these compounding problems. Their main source of cash, oil, is shrinking. The national savings account is almost empty. They have to raise taxes, but doing that is just going to slow down the economy even more. In fact, the only part of their manufacturing sector that's really booming is the arms industry, which is just burning money for the war. And the only way to pay for it all is by going deeper and deeper into debt.
Which brings us right back to where we started. Yes, these are absolutely severe, systemic economic problems. And yes, they will almost certainly make the situation worse with each passing year. But, and this is the key takeaway, economic pain alone doesn't automatically stop a war or cause a regime to collapse. History is full of examples of nations that can withstand incredible economic hardship for a very, very long time.
So we end with this. The Russian economy is on a high wire, performing a really dangerous balancing act. They're juggling a weirdly strong currency, an inflation trap, shrinking revenues, and growing debt. The fundamental question isn't if this model is unsustainable. It clearly is. The real question is, how long can they keep from falling?